Now adjust the volume control so that the sound can be heard in all parts of the room.
This is the Protect Your Assets podcast.
You get the idea?
It's on the internet.
Make him the cutest that I've ever seen.
Go on.
Give him two lips like
It's like no cheese I've ever tasted.
and tell him that his love
Here's the Sandman.
over Sandman.
Tony Robbins says that to get rich, you need to hang around rich people and copy their habits. So today, I'm going to share with you some habits I've learned from my wealthiest clients. This should be an entertaining show, and you'll only find it here on Protect Your Assets. Good morning. What a beautiful day. I'm David Hollander, and this is Protect Your Assets. For those of you just joining us for the first time, welcome. People around here, you hear the jingle, they call me the Sandman. And that's because I've been running a tax, legal, and financial firm for over 30 years. Ask me a question anytime you like. Email me to questions@pyaradio.com. Got one this week. Questions@pyaradio.com. So over my career, I've been very fortunate and blessed to work with a lot of famous athletes, successful business owners, even someone who won the lottery. And by working with these people, I've learned a few things. I recently heard Tony Robbins say that if you want to be rich, you need to look at your social group and try to hang around those you'd like to emulate in terms of your lifestyle. Well, you may not like some of those people. So today I'll be talking about rich people, more specifically how rich people think about and approach their money. Success leaves clues. If you want to increase your level of wealth, even if you're already a millionaire, it pays to learn how people wealthier than you handle their money. So today will be an intriguing and insightful show. Stick with me as I cover some habits of rich retirees. Now, let's get started. Well, it was quite a week. We had one of the worries happen. Israel attacked Iran, still going on. Trump stopped his talks with China on tariffs in London. And the market didn't like it. The market was down this week 1.3% on the Dow, S&P off slightly, about 0.5%, NASDAQ off 0.6%. International index was up 1%, and the 10-year Treasury tells a whole nother story, closing at 4.41%. Oil had a big week as a result of the Middle East, up 13.9%, and bonds 0.7%. So what's going on in the markets, and what am I seeing as I look at the landscape? Well, things are slowing down. First, there is a growing body of evidence right now showing that the labor market is starting to cool down. To that point, we look at the 4-week moving average of jobless claims, and while it hit about 240,000, this was the highest level we've seen since August of 24. And so if that continues higher, and 260 would be the next negative sign, I'd say, then that means that the labor market's slowing down, and that will be bad for the consumer who spends money when they have paychecks. So if that continues again for another 4 weeks, well, it's just a negative sign. Second, as I just mentioned, President Trump ceased his negotiating with China in London, and it's possible that taco won't hold up. Well, that means that the baseline 30% tariff on Chinese imports, plus an additional 25% on sectors like steel and aluminum, that's back in place. And where we may not be back to where we were several weeks ago when it was 145%. Still not good overall for the cost of imports coming from China. And so that'll just raise costs. And once the inventory, because I believe that a lot of U.S. manufacturers have been stockpiling as a result of what they're worried about. Once those supplies run out, that'll just be another negative for overall inflation and higher prices. And so that's something we got to be on the lookout for because it looks like it's starting to happen. So that just got me thinking this week. Was the bond market wrong? What does that mean? Well, this past week, the 10-year Treasury was down to 4.36%. The 2-year, 3.9%. And the 1 month hit a year low of 4.18%. So that signals that the Fed might cut rates this coming week. Well, that would be completely the reverse of what I was just saying. So is that likely, or was this just a flight to safety? I'm going to say flight to safety because that usually happens when there's some geopolitical event. And of course, we just saw a pretty big one. And this is something a lot of people are worried about. So when those sort of things happen, there's something called the flight to quality, where people move to what they perceive to be safe. And that makes things usually less yieldy. Also, it is our update on the Bitcoin and crypto market. And while I don't think it's appropriate for everybody, it sure is becoming popular, and people keep asking me about it. So let's talk about some milestones. Bitcoin hit a new all-time high, reaching nearly 112,000 a coin on May 22nd. The Bitcoin investment firm River reported more Americans hold Bitcoin, 50 million, than gold at 37 million. The country adoption continues with the National Bitcoin Reserve, UK, Ireland, Taiwan, Ukraine, and Pakistan. And industry advances. JP Morgan CEO Jamie Dimon said they will allow clients to buy Bitcoin, but won't custody it. Morgan Stanley will introduce Bitcoin trading on its E-Trade platform in 2026. And Coinbase, symbol COIN, was added to the S&P 500 index on May 19th. Some other ETF news that's noteworthy as it relates to the crypto space. AUM in the iShare Bitcoin Trust, which is an ETF, symbol IBIT, hit a new all-time high, $70 billion, reported on May 30th. How about some regulatory moves? We've got the U.S. Senate advancing the Genius Act. This is a stablecoin regulation bill. You got the DOL, the Department of Labor, Employee Benefits Security Administration, rescinded a 2022 order which discouraged the use of crypto in 401k plans. Does that pave the way for people to buy that in their 401k? Might be. And the OCC stated banks can buy and sell and custody customers' crypto assets. Well, those are some big changes. Are you rich? What does that mean, and how can you live your best retirement? Well, stick with me as I'll cover some secrets I've learned over the years from my wealthiest clients. You're listening to the Protect Your Assets Show with David Hollander. That's me. We'll be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to PYAevents.com and signing up for our next free event. That's PYAevents.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander, also known as the Sandman, and you are listening to Protect Your Assets this morning. And the question came up, are you rich? Well, today we're covering some of the secrets I've learned from some of my most successful clients. If you want to increase your level of wealth, even if you're already a millionaire, it pays to learn how people wealthier than you handle their money. So let's look at the Webster's Dictionary. By the way, it was curious when I looked this up, and I guess someone else owns Webster's now, but I'm still going to call it Webster's, sorry. Wealth is an abundance of valuable material possessions or resources. While I find people talk about wealth and money in the same sentence, money essentially refers to what your liquid assets or resources allow you to do with them. Extra money or cash or liquidity that you don't need to live on allows you to make choices. And some of those can be unlimited. And it's those choices that seem to matter and produce a series of results that continue to multiply. And what am I talking about? Well, the first lesson that I've learned is that rich people spend their money with purpose. I have found that my clients who have planned and figured out what they need to cover their expenses and have figured out what they don't need, and then take that amount and spend it on experiences that mean something to them, are overall happier than those who don't, who just sit and save. It's actually kind of stark when you see the difference. You're like, whoa, why are you so happy? Well, I just went and drove a race car. I just went and played golf in Scotland. I mean, these are the sort of stories we hear about. We've all heard that expression, you can't take it with you. And for most families I've worked with, I can't remember one who has passed with a dime to their name. Think about that. Not one. Thousands of families have not seen that happen. So most likely, you're leaving quite a bit on the table. It means you need to make a plan and start figuring out how to use it and how to spend it so you end up close to where you want to be. And then you have to do it. That means that splurging occasionally, it can be okay. And one way some of my clients do this is they set up a splurge account. And they have us put extra money that's being generated into that account over time. And this is because we know their plan says they don't really need it. And then it's just there. It's not going to change their reality, change their lifestyle. And then they just spend it on their splurge. Indeed. Does your current plan help you make splurge decisions? Well, if not, that means your plan may not be working. So you can call my team right now and get your splurge kit. 866-PROTECT, 866-776-8328 to get your splurge kit. Now, lesson number 2. Rich retirees, well, they invest wisely. Speaking of a rich retiree, Warren Buffett said, you try to be greedy when others are fearful, and you try to be fearful when others are greedy. Well, that sounds good and logical, but it's basically impossible to time the market. A better way that most successful retirees have done it is by investing systematically over time a % of their earnings into tax-favored accounts like a 401k, Roth IRA, and or life insurance. Of course, there is risk and there is fear of losing money, but over time, by staying consistent with an investment plan that is traditional and not overly speculative, I have found has worked well for many wealthy people. As I said earlier, you need to make sure you have enough to cover the emergencies. You need to have liquidity and available cash, but some % of your earnings, as you're earning it, you need to pay yourself first. That's where a lot of people fall down. They just don't do it regularly. You have to be mechanical about it. Even if you have fear, you're going to look at your balance, you're going to say, I don't know if I can do that. Well, if you set it up automatically and you just make it happen, it will happen. But you have to do that. You have to take that step. Each paycheck, invest something into yourself first. Usually a diversified strategy that works well, and that helps you grow money over time in a tax-favored environment. And you want to make sure you're optimizing your deductions, taking only required withdrawals, and using international tax treaties to your advantage. One way to make sure you're doing the right things right now is to know if your 401k and IRAs are on the right track to provide you with lifelong income, even in these uncertain times. Do you know if your investment strategy is looking at the big, beautiful bill right now? You can't get a second opinion from the guy who gave you the first opinion, particularly if they miss that. So get a second opinion right now and get my retirement checklist for free by calling this number, 866-PROTECT. Find out what the big, beautiful tax bill means to you right now by getting my retirement checklist. 866-776-8328. My team is standing by. Give them a call right now. 866-PROTECT. Now, coming up next on Protect Your Assets, it is time for our popular They Say segment, where I'll cover how my rich clients assemble their team of advisors. So much more is coming your way. You're listening to Protect Your Assets. We will be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to PYAEvents.com and signing up for our next free event. That's PYAEvents.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander, also known as the Sandman. And you are listening to Protect Your Assets this morning. People around here, I wish I could whistle like that, call me the Sandman. And that's because I've been running a tax, legal, and financial firm for over 30 years. Are you rich? Well, today we're covering some of the secrets I've learned from some of my most successful clients. If you want to increase your level of wealth, even if you're already a millionaire, learn how people wealthier than you handle their money. Now it's time for one of our fan favorite parts of the show. This is our They Say segment, where we debunk common myths, half-truths, and sometimes just bad advice. They say.
Who are they? What do they know that I don't? And what are they saying this week? Here's David Hollander, the Sandman's answer.
All right, so here's one they say. They say that the super rich have assembled a team of professionals to help them navigate taxes, investing, legacy planning, and giving strategies. So how can the millionaire next door accomplish the same thing? Assembling a team of money pros? Good question. So this is interesting. It depends on what you call super rich. I mean, I've heard that defined as someone who's worth 10 million, 100 million, 200 million, a billion. And what I've found is for those who are typically at 200 plus million, they have what's called a family office. And family office usually is a private group of people that are hired by that wealthy person who has their own CPA, their own financial advisor, and a attorney who's on that staff. They're employees of this person, and that's their job. Usually pick them from different firms and assemble them, and their job is to run their money, and that's it. So that's what the real wealthy do, but when you look at the salaries and the cost to run that, it becomes a little difficult. So that's why a lot of folks who I'll call, again, wealthy, they tend to go out and find folks who do those jobs, and then they talk to those people, and they try and cobble that all together. And sometimes there's collaboration, but most times what I find is there's not. The financial person's doing his or her job, the CPA is doing their job, and then you have this attorney who drops in every now and then that does their job. And somehow you as the person or the investor, the client, you're trying to put it all together, and you're busy, you have things to do, so it doesn't really happen. Well, that's why my firm became in existence, because we do all three of those things under one roof. We have CPAs on staff, we have estate planning attorneys on staff, and we have CFPs, financial planners, on staff. And we all work together on our clients' situations. And when we get over our heads, we go out and find people who have a little more experience. But by collaborating together using the planning tools that are available today, we can look at data. We can figure out things that help our clients, and tends to work by using this holistic strategy to adapt our clients' life changes and look at tax efficiency and also protect your legacy. Each profession we have here brings their experience to the table to achieve better results. And so that's how we do it. The next lesson I've learned from wealthy clients is rich retirees use debt wisely. Wealthy retirees understand how debt can create leverage by enabling them to borrow money at a lower interest rate than what they're going to make on that money they invest. And that's risk. There's absolutely risk with that. And if you're wise about that, wise about your debt management, these folks typically focus on diversifying their income stream by investing in things like real estate, income generating stocks, other passive income sources to ensure consistent cash flow to enable them to fund their lifestyles without depleting their principal savings. Now, this is where this can get a little risky. So I do have a client who's in the South Bay, a tech person, had a lot of stock options, would liquidate those over time and start to buy apartments. And it seemed like a good idea. And then, as I said, using our tools and our financial planning team, we started to dig into the management report. So he has a manager that runs several of his apartment complexes for him. And we started looking at the numbers. And here's a rule of thumb. If you're not making at least 5% or better cash flow on those properties consistently, it may not be a good deal. Think about that. Because if you can make 5% or more on passive, less stressful investments, like, why would you not do that? Real estate it can be a great thing. There's a lot of people who are just real estate people, and they've been doing this for a long time, 40, 50 years. And frankly, they've been lucky because real estate has certainly appreciated in value over that time. But if you look at it most recently, it's been more difficult. And prices are certainly elevated, and insurance prices are elevated, and debt now is elevated. And so just to get into it, it's more expensive. And so to cash flow positively and come out on the other side of that is tough and can be very dangerous, meaning that if you're borrowing money at current rates, you're not doing that wisely, and then you're not cash flowing, well, that down payment you put on that property could be lost, all of it. And if the properties aren't appreciating, again, you could lose it all. And that's the risk. And that's obviously people are aware of that and they don't want to take that risk, and then they never do it. But if you sit down and understand some of these things, how they work, before you get into something like that and really run the numbers, see if that makes sense, then do it. So let's talk about debt. I was talking about the Fed at the beginning and the bond market. The bond market this past week signaled that the Fed next week could make their first cut. It's the first time we've seen that in a while, actually all year. And so that means that interest rates could be going down. And so if you're going to be borrowing money, you most likely want to do that after rates have actually been cut. I wouldn't speculate on that. But if you're in a situation now where you're looking to borrow money, you need to borrow money to make something happen, try looking at interest-only loans. There are some banks out there that will fix it for 10 years. They'll give you an interest-only loan with a fixed rate for 10 years with no prepayment penalty. So you can go out and borrow money right now against that property, put your down. As long as you're cash flowing, if you don't know what that means, we'll help you. Ask for help. We can run that in our e-money planning tool with our financial planning team and look at all your resources and see if that makes sense. Help you think about it if you don't know what you're doing. Or if you want help, I met a very successful businesswoman last week in our Marin office who has lots of things going on. She's very successful. But when I started to, and she's been doing this for a while, and when I started showing her tax return and how she's actually not doing so well on her properties, she said, never really thought of it that way. So in this case, her business was floating her real estate, not the other way around. That's not good, especially if you're going to retire in 5 years. So in any event, these are the kind of things that you have to think about before you just jump in them just because you see someone else doing it, unless you really understand the details. And that's where Tony Robbins is talking about hanging out with these people. If you hang out with them and you have these conversations about how they're doing, what are they doing, how's it working, how's it not working, where are the problems on a regular basis, you learn things. But if you aren't having those conversations and you're just observing and going, oh, I see he's driving a nice car and he's taking these trips and lives in a big house, and I guess that's how he did it. Well, you don't really know the inside track and you're speculating, and that can be dangerous, particularly when things change. Next lesson, rich retirees monitor the tax code. It doesn't matter how rich you are. I'll say that again. It does not matter how rich you are. Taxes are inevitable. I have found that rich retirees understand how to minimize the amount they pay to the IRS each year by taking advantage of tax breaks such as credits and deductions. They also examine the newest tax laws to see how they can structure their finances to pay the least amount of tax while also following the law. Monitoring the tax code and tax planning can significantly impact your net worth. You'll know how much you'll owe in taxes and how much you can invest to generate even more income if you know. So I'm going to ask you a question. What does the big, beautiful bill mean to you? If you don't know, and if you haven't looked at that yet and thought about it, well, you can get educated right now on it because we have a piece on the big, beautiful bill and what it can mean to you. Now, it's easy to get this. It's painless. We'll email it to you right now. Absolutely complimentary. But you have to pick up the phone and call this number, 866-PROTECT. Call us right now. You got Nick. You got Lucas there ready to talk to you. 866-776-8328. They'll shoot that right out to you. 866-776-8328. Now, coming up next on Protect Your Assets, we will share more habits of rich retirees. Stay with us. You'll be glad you did.
If you missed any of Protect Your Assets with David Hollander, all you have to do is go to pyaradio.com where you can download or listen to our latest shows for free. Just go to pyaradio.com on your computer or mobile device when it's most convenient for you. That's pyaradio.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander, also known as the Sandman. And you're listening to Protect Your Assets this morning. People call me the Sandman around here because I help my listeners sleep well at night by protecting their assets, keeping more of what they've worked so hard for. And that's because I've been running a tax, legal, and financial firm for over 30 years. Very fortunate to have a great crew behind us that supports these things each week. We look at all sorts of situations. So today we've been talking about, are you rich? We're covering some of the secrets I've learned from some of my most successful clients, just to run through them. Rich people spend with purpose. Rich retirees invest wisely. They also have a team of experts that they work with who are up to date on things. They use debt wisely, and they monitor the tax code. And so if you've missed any of that, you can go check out our podcast wherever you get your podcast. Just type in the little hourglass, Protect Your Assets, and you'll find the show there with all the different topics we've covered, whether it's taxes, investing, estate planning. You can find it right there. And if you like it, please tell a friend. I really appreciate that. So we've covered how rich people spend with purpose. They invest wisely. They have a team of people that help them. But what are some other things they do? Some final thoughts. For many wealthy retirees, being rich means being able to afford things and experiences without stressing about your money. Many of our clients get 8 hours of sleep per night, so their bodies and their minds can recharge. Sleep has been shown to stave off disease, reduce the risk of type 2 diabetes, heart problems, and high blood pressure. So get your sleep. They also develop a giving attitude. Wealthy retirees often emulate a charitable mindset. In fact, research suggests that giving to a cause or charity not only helps the recipient, but also rewards the giver in measurable ways. So much so that it may even increase your life expectancy. According to an article by Donors Trust, studies have shown that people who engage in regular acts of kindness and generosity tend to have lower blood pressure, reduced risk of chronic disease, better cardiovascular health, and, get this, a stronger immune system. Interesting, huh? And what are some other things that rich clients do? Well, I've found that they find a balance between spending and enjoyment. Even with considerable wealth, retirees habitually maintain keen budgeting habits. Tracking large expenses such as real estate, health care, or expensive luxuries can help you against overspending. Many of the wealthiest retirees also practice this. Maybe look this up. The 50-30-20 budget rule. You spend 50% on needs, you spend 30% on wants, and you put 20% away towards savings. But like I mentioned, don't just jump into things that sound or look good. You want to be really careful. You want to do your homework. Find out as much as you can from someone who's been very successful at it for a long time. And don't be afraid to ask those tough questions. Real estate always seems like a great thing to get involved in, but unless you really know much about it, it can be very, very dangerous. And so if you know someone who's been doing it a long time, find out from him or her what are some of those secrets that they use to get ahead. And ask them the straight question, hey, when's been a tough time? And why was it tough? And what did you do to get through it? You'll find that you might learn something that then you can implement. Also, right now, with the taxes that are out there, there are opportunities that exist currently. And as we've been talking about and we'll continue to talk about, those taxes will most likely go up over time to pay the debt that's mounting and pay all the entitlements that are out there. Someone's going to have to pay for it. So if you want to find out more about taxes, you definitely need to get involved in that and figure out ways that you can start paying less taxes now, saving more of what's rightfully yours and not ignoring it, not waiting till April 15th or after you've filed an extension to figure it out later. It just doesn't work. You got to get ahead of it. Got to put a plan in action. All right, now let's inhale through your nose, exhale through your mouth. That's it. Picture a day when you can walk into the palace at Versailles and enjoy a glass of rosé on the Seine. Picture a day when you can relax, travel, and do all those things you know you want to do. If you have questions and they aren't getting answered, or you have that feeling, you know, your gut, well, pick up the phone right now, take action, and get this checklist. It's absolutely complimentary. 866-PROTECT. You can call Nick and Lucas right now. They're sitting there ready to talk to you. 866-776-8328. They'll ask for your email, and then they'll send that right over. My retirement checklist. Get it now. 866-776-8328. Easy number to remember. 866-PROTECT. I'd like to give a big thanks to the Protect Your Assets team for a great show today. Executive producer, network manager, Kevin Renfer. And of course, all my fabulous producers, Nick, Lucas, Raph. Because without my team, I'm just another pretty voice on the radio. You've been listening to the Protect Your Assets show. I am David Hollander, the Sandman. Go out and make the rest of your life the best of your life.
Investment advisory services are offered through Liberty Wealth Management, a registered investment advisor. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. The strategies mentioned are not suitable for everyone. The information expressed does not consider your specific situation or objectives and may not be appropriate for all investors. Past performance is not indicative of future results. To better understand the risk associated with investing and how it reacts to different market conditions, listeners should always consult with their qualified investment professionals, financial advisors, legal or tax specialists, and conduct their due diligence before making any financial decisions or taking any action. The legal information provided on the air is not intended to substitute for callers hiring their lawyers to advise them about personal legal matters. Investments involve risk and, unless otherwise stated, are not guaranteed. Liberty Group LLC paid for the following program, and the host's views and opinions do not represent those of the station or its ownership. California Life Agent number 048569. Persons engaging the services of one affiliate of Liberty Group LLC companies should be aware that each company is operated separately. You're listening to the Protect Your Assets Radio Network.